Hello friends. So friends, we are going to continue with ratio analysis. And under ratio analysis, we were discussing about profitability ratios. This is the last set of ratios in the ratio analysis, that is profitability ratios. Under profitability ratios, we have covered three types of ratios. The first was gross profit ratio, right? Second, operating ratio. And the third one, operating profit ratio, right? All the profitability ratios are expressed in terms of percentage. And what is the main aim of profitability ratios is to identify that whether our resources are being efficiently utilized and thereby resulting in appropriate profits, right? This is the main aim of any profitability ratio, that is to identify whether our various resources are being efficiently utilized and thereby leading to the earning of sufficient profits covering all the relevant costs. Clear? Now in this lecture, we are going to start with the fourth kind of profitability ratio, that is net profit ratio. Net profit ratio. Now, first of all, what are the two elements, what are the two financial factors between which you have to establish the relationship? The first factor, as the name suggests, is net profit after tax divided by revenue from operations multiplied by 100. Clear? Net profit ratio is, we have to establish a relationship between net profit after tax and revenue from operations multiplied by 100, because we have to express the profitability ratios as a percentage, right? This shows that out of the total revenue from operations, what is the net profit after paying the taxes? What is the amount that you are going to take home? What is the amount that you will be taking home after paying all the expenses, after paying taxes? What is the net profit that you will get in your pocket from the revenue from operations? Clear? Now, what is net profit after tax? Net profit after tax, how to calculate that? In the last lecture, I prepared trading and profit and loss account. I'll again prepare that trading and profit and loss account. I'll again prepare that. I'll say trading and profit and loss account. Clear? Here you have opening stock. Then you have purchases. Then you have any direct expenses, right? Here you have sales, net sales, that means sales minus sales return, closing stock. Whatever you get in the trading account is gross profit. This is what we discussed in the last lecture also. Trading account, you all know how to prepare. You have learned it in class +1. Now, taking this gross profit into profit and loss account. This is what you have been doing. Here you will add all the incomes, whether these are operating incomes or the non-operating incomes. Here you will take all the expenses, whether operating or non-operating. Whatever you get at the end is net profit. Right? Now, out of this net profit, what is this net profit? This is your income. This is what you will be taking home. Now the government says, out of this net profit, give some money to the government. That is your tax. Here you will pay tax out of this net profit. What is ultimately left with you is net profit after tax. This is the amount that you will be taking home. Right? The government says pay some amount of your net profit to the government and take the rest of money to your home. So after adding all the income, subtracting all the expenses, what you get is net profit. Now out of that net profit, some part of the net profit will go to the government in the form of taxes. Now after paying taxes, what is left with you is the net profit after tax. Right? This profit you will be taking home. And if we talk about the net profit ratio, this is the relationship that out of the total revenue, out of the total sales, what is your net profit after tax? What is left with you at the end after paying all the expenses, after considering all the incomes? What is left in your pocket at the end? That is the net profit after tax. And you have to identify that out of the total revenue from operations, what is your net profit? Now with the help of this trading account, you can calculate net profit after tax. Right? Whatever information is given to you in the question, just remember this trading and profit and loss account in mind. Then you can calculate net profit after tax. If you are able to calculate this net profit after tax, then you all know how to calculate revenue from operations. Right? And these two elements lead to net profit ratio. Clear? Higher the ratio, the better it is, because this will show the higher profits out of the revenue. Higher ratio, better it is. Right? Because it will show that the company is earning higher profits, the various resources of the company are being efficiently utilized. Clear? So let's do a practical problem on this. You are given revenue from operations 5 lakh, right? Gross profit of 2 lakhs. Salaries and wages of 45,000. Advertisement expenses of rupees 10,000. Interest expense of rupees 5,000. And last it says rent income of rupees 60,000. Clear? Calculate the net profit ratio. Now you are given the gross profit. That means you are given this figure, or I can say this figure. So you have to prepare this much part. Clear? Now what you will do to calculate net profit net profit after tax, what you will do? You will take gross profit of 2 lakhs. Right, out of this gross profit, you will subtract any expenses. Salaries and wages is your expense. You will subtract 45,000. Advertisement expense of 10,000 you will subtract. Interest expense of 5,000 you will subtract, and add back rent income of 60,000. Any kind of income is to be added to the gross profit, and any kind of expense is to be subtracted from the gross profit. So here the gross profit is 2 lakhs. I have subtracted all the expenses, that is 45,000, 10,000, 5,000. I add back the income, that is 60,000. Clear? So what is net profit after tax? What is the net profit after tax? This comes to 2 lakh. Right? And the other element that you have to establish relationship is revenue from operations. This is directly given, 5 lakhs. So you can calculate net profit ratio. You're not given the taxation part, so you will consider this as net profit after tax. Net profit ratio is net profit after tax divided by revenue from operations multiplied by 100 to be expressed in percentage. This is 2 lakhs divided by 5 lakh multiplied by 100. This comes to 40%. Right? This means out of the total revenue of 5 lakh rupees, 40% is your net profit. The rest of it is expenses and everything. Right? Higher the ratio, the better it is. Clear? So friends, this is about the net profit ratio, where we establish relationship between net profit after tax and revenue from operations. Right? How to calculate net profit after tax? Just keep in mind this trading and profit and loss account. It will simplify the things for you. Right? Just keep an image of this in your mind. Then everything is simple. Right? So friends, in the next lecture, we are going to complete this chapter of ratio analysis with the last ratio, that is working capital ratio. Right? Sorry, this is return on capital employed ratio. Return on capital employed ratio. Right? This is going to be the last ratio of the chapter, ratio analysis, last ratio of profitability ratios, return on capital employed ratios. So friends, if you have any queries, just send me an email at ksjteaching@gmail.com. Right? So that's all for this lecture, friends. Thank you so much.